Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?
Alright, so hi guys, welcome back to another video. For those of you who are new to the channel, welcome. This is the Greedy Trader channel where we talk all things market profile. Now if you haven't seen any of my videos, just go back, have a look at what we do, what we said, what we've done, and yeah, come to your own conclusions basically. I mean, we're here to do what no one else is doing, and that's inform traders how the business is actually played. I have more than a 15-year background in investments on the institutional side as well as the retail side, so I've experienced everything you've experienced, and I've experienced even more because the institutional side is just as treacherous, even probably more treacherous than the retail side. So in these videos, that's what I try and do, is just try and expose as much as I can expose, so traders have a good understanding of what they're coming into, and so they can understand how to do this business and gain some perspective. For those of you, of course, who've been around for a while, then this is just another video. Okay, so we did a whole rundown that was on my last video that I've just pretty much published. We did a whole rundown on all the asset classes, what we were expecting and what they've done. So this video is going to be, we're going to do that too, but I'm going to try and talk about some of the things that as traders we need to be aware of as you come into the business. And like I say, for me, trading has to be real, right? So in other words, I need to make it real. So I'm not in that business of like losing money here and there and whatever. I think, in fact, I'm just really averse to all that stuff. I think if you really want to make this work, you really need to change your perspective, right? There's so much stuff out there in terms of how to do this, how to do that, you know, guys being flashy. Oh, I made a Lamborghini Instagram, or a study K here on my, you know, live demo account turned live. Oh, you know, I'm a prop trader, made this 1,000. Look, yeah, it's good. It's good. You know, everyone does what they do, and that's nice. Having been on the sell side, we know how we drive the people who tell you this stuff. We know how we motivate them to go out and tell you this stuff. You know, again, not many people from the sell side will decide to do what I do, which is why I've set up my trading in such a way where, guys, if you go through my channel, you'll see I sell options. I do quite a few things to also hedge out my portfolios, and I trade more from a professional standpoint. Whilst you're going to find a lot of people are punters, and they do feel that, you know, the excitement from trading is really worth it all, and that's also totally cool. But if you're on this channel, it's because probably you've tried a few things, and now you're watching this random channel on YouTube that doesn't have a ton of followers like some of the bigger channels, and you're not really absorbing that content. And to me, it just tells me that you're tired and you're fed up and you're looking for something different. Well, sadly, YouTube's not going to promote me. I mean, I'm just not dedicated enough to YouTube to get promoted. I got a couple of videos, people find me, they come into my Discord server, they look at some of the stuff I do. I get some additional, I'm a businessman, so I get additional business on top of that too, but I'm always certain that I'm helping traders along the way, and you can see that from my Discord server. So again, it's just down to how the internet works these days. Sensation sells, right? And I'm not that sensational. I'm just like, you know, for all intents and purposes, I'm just an average guy. I'm, you know, I got a few books on the internet, whatever, but I'm an average guy. I'm not, you know, I'm not like you know, I'm not like a market wizard or anything. But anyway, maybe one day I end up in market wizards, who knows, right? But I'm not that, and for that reason, I'm not going to have a huge following. I'm only going to be able to help people who are open enough for me to help them. Anyway, let's talk about some of the things that are very destructive mindset wise to traders, that if you want to be in this business, you really have to get these things in order. And the first, and it's such a cliche in my opinion, is the psychology of things. Right, so I'm going to explain this using charts. Right, so I'm not just going to sit here and talk, right? I'm going to explain this using charts. So we're looking at the chart of the Aussie dollar. Again, I always say to traders, right, and talking about psychology, everything's perspective. I prefer to look at a longer term profile, which is for all intents and purposes, if you're going to translate into a chart, it's a weekly chart, right? So I've got weekly profiles. So in other words, this is a weekly trading chart. And everyone's going to look at you thinking, how do you trade a weekly chart? I mean, Jesus Christ. Well, that's because you don't understand volatility. You don't understand it. That's why you would ask that question, is because if you understood volatility, then you would understand that you don't need to intraday trade to make money. In fact, it's a lot better for you to trade weekly charts, monthly charts even, than to trade 4 hourly downwards. In fact, for me, I think as a new trader, you shouldn't touch anything under a 4-hour chart, right? I think when you get a little bit more experience and you want some excitement in your life, and you know you can afford to put some capital aside to have some fun, right? This is a casino after all, right? So you want to have some fun, then you can start looking at intraday trades, and that probably gives you a lot of reaction dexterity, if anything. Like you start to see things develop more frequently, so you get more visual repetition, right? And that's the benefit that you get from an intraday trade, is you start to understand market behavior on a smaller time frame, and that gets replicated on a bigger time frame, not necessarily over a longer period of time, which is the misconception, is that I'm trading a weekly chart, then I need to hold for longer periods of time. And I can demonstrate that that's not the case, right? So let's take, for example, this is a weekly chart, weekly profile, I've already said that. So let's take it, for example, this bear move, right, all the way down. Now, if you're trading with some of the concepts I've taught in previous videos, you would understand, okay, we got a liquidity grab, big weekly profile setup, bids stacking, right? So you know you want to be long. Right, now let's say you saw the dip, you got long, and then covered the profile for your risk. Now risk reward wise, let's see how this played out, and let me just narrow some of this down so we can get to see a larger portion of the chart. So risk reward wise, right, this is where we stood, right? So even if you got long round about this sort of area, right, as an example, that's 220 ticks, right? And that was in 2 weeks. Right, so if you held that for just 2 weeks, 220 ticks, right? If you held it for 2 weeks towards the end of the week, right? So 2 weeks towards the end of the week. In fact, it wasn't even properly, it's like a week and a couple of days, right? It's 305 ticks to the top. Let's say you covered at the high, right? You were aware of perhaps a small liquidity grab, so you wanted to be out in 250, 260 ticks, right? So that's 250, 260 ticks, right? On a standard lot, that's 2,600. On a 10 standard lot position, where you can start to do the maths, it's 25k, right? So you've technically, you're allowing for more risk to take this trade, but you're reducing the probability of the trade going against you because you're getting information that is more reliable. Larger players, like, so if you're an institutional trader, you don't really intraday trade. That makes no sense, right? That's not only the commission is going to kill you, but let's say you even have near zero spreads that you can do it, like you're really bids and offers. It doesn't make any sense. You're not going to intraday trade, because if you can trade at the bid, then you can scratch all of your trades literally in a microsecond. So you're not going to do that. You might as well play the game they used to play in the old pits, where, you know, if you can buy at the bid, then you can sell one tick at the offer, you make money every time, right? So you know, you just need more capital, and you know, if someone realizes that you have access to that game in town, there's no shortage of where money's going to turn up to kind of help you play that game. So you don't necessarily want to put yourself in a position where you are the spread, right? Essentially, you are the guy that everyone makes money off, and that's kind of what it is when you aggressively intraday trade without taking into consideration the longer term picture, right? The longer term profile, where you should be playing more, or at least establishing a core position around that. And if you wanted to hit intraday trade, do something complicated, then Yeah, it's fine. But again, if you're coming into this just thinking you're going to swing for the fences, then that's not going to work for you. You have to be a directional trader. I think the game has changed so much that, look, even the HFT guys sometimes lose money, and these guys are precisely playing the kind of game that you want to play, right? But they got more money, more ability to do it. They're going to cut you up. Just goes without saying. But when you're playing a weekly profile, you're allowing for that intraday volatility to play into your position without much hassle, and then you're relying on the fact that you've made a macro directional bet. That's what you're doing. You're making a bet, macro directional bet as to where this thing's going to go, and you're using some good concepts like some of the liquidity concepts we talk about, and also outside of liquidity stuff, the general profile mechanics that we talk about here on this channel, and also taking into consideration some things like volume. We do a lot of stuff around volume price analysis, for example. So, and that's where our Wyckoff stuff comes in, right? So there's just so much that you need to put together in trading so that it becomes a professional sport for you, as opposed to you being a punter, right? And then you start looking at the tools that can give you those really key swing directional levels, and we spoke about that on our last video. So if you haven't seen the last video, check it out. I don't want to go over that all over again in the interest of time. So again, you can see that in 2 weeks you did decent vol. Now in retrospect, let me split the profile, right, and just see what an intraday trader would have had to face over an entire session. So you can see over an entire week session, right, these are 4-hour rotations. You can see how much the intraday trader was back and forth. I mean, these are like some decent tick swings, steady tick here and there, right? If your stop's not in the right place, your risk rewards are off, and everything's just off, right? And you have to trade it. And the only way you made money is if you got lucky. Maybe you saw this big break, you took the high, and then you made like 74 ticks, and maybe you didn't, maybe it was 50, and then you got to trade again next week. And then you're probably going to go in the wrong direction. You get stopped out, give away some of that 50 ticks that you made back. Now you've got 20 nets, and you're all the time you are consistently burning trading commissions, right? Whilst you do that, so that's offsetting against you. Whilst when you're in a directional position, the only thing you have to contend with is largely the swap, right? It depends on what asset you're trading. You could even be gaining from the swap. So again, these are some of the stuff that we try and talk about and bring to your attention. And then when we use professional concepts like understanding bid stacking, offer stacking, gaps in value trades, responsive behavior, initiating behavior, initial balance breaks, once you start getting into that level of stuff, right, then you start to realize how much you were doing wrong, and then you start to realize how profitable you can be by changing your perspective. So that's the psychological aspect of trading, and which is based on understanding and knowledge, right? So that's the first thing that traders need to get right, is understanding the psychological aspect of positioning, right? Because when you don't understand how the market actually works and what it's trying to do with you, or how the players in it play, then you're gonna buy into a lot of ideas that are not exactly wholesome or correct, for example. So that's one thing. And then we have the emotional side of it, right? So that idea of like, I gotta trade every day. If I'm not hitting a trade every day, it's not working. That FOMO aspect of things becomes the other side. So again, like thinking about charts, right? Let's say that you saw this pull into bids, right? So these lines are here is because they're historical bids there, right, that we've managed to sort of pick out in the past where traders have been most active, right? So we've been looking at a lot of bids, right? So again, if we're looking at bids and we're thinking, okay, we're hitting a bid, we're coming out of those bids, and we're closing a little high, there's some market inefficiency here. For example, we know there's a gap in value here, right? We know this is going to get filled, right? So then the market goes boom, 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 and it closed higher, right? Why would you want to get long? Yeah, of course it went high, a little bit more higher, but why would you want to get long close to offers? And why would you want to get long heading into what could be a liquidity grab at the prior highs, right? We know there are stops above prior highs, right? It's not rocket science. We can also see there are a ton of offers lining up ready to create resistance, right? Yeah, we broke through, looked a little bit deceptive. We've got statistical benchmarks, value highs sitting here, for example. What are the chances that we've now traded several weeks of value and we're trading the higher values? What are the chances we're going to be able to hold up? There's a volatility to also contend with, right? And then what happens? We get a bit of a distribution up here, so an offer stack, and then boom, we close the inefficiency, we go through value, we close the other inefficiency, and before you know it, we're down, right? Now imagine you were getting long here. You've held, missed that play. You now say, well, I'm going to keep this. We're going to bounce off late bids. We don't bounce, we build up, take out those bids. Now you're out of pocket straight away, right? And that's FOMO, right? It's because you chased. Why did you chase the trade? Right, you know the profile is telling you that all you have to see is bid stacking, right? And now you know you're ready to go. And that takes us to our trade, right? We were long the Aussie. When in the previous video we said that, like, we're bid stacking. So if we start trading and hitting that bid and getting reaction, which we did in W period, we're getting long. Now we're long, positive P&L. Gap in value, we're expecting more upside. When this market was tearing to the downside, you get the FOMO people coming in. What did we say? Let's expand this up a little bit. What did we say? We said, well, for the first time in our videos, we're putting on the MFI, which is the money flow index, right? This is not a straight up over sort of a board indicator. What it's helping us do is understand where the squeezes are going to happen, right? And we're saying that, well, this MFI tore down too quickly. Right? It tore down into squeeze areas too quickly, and the price hasn't really reflected that. We're trading into bids. I said we're going to bounce, right? We're probably not going to break, we're going to bounce. And when we bounce, a lot more people are going to be in squeeze positions. Now we're bouncing and the MFI is still going lower, right? So this is a known squeeze position for the year, guys. Look how consistent the squeeze positions are. So we're talking going back to 2017, even as far as 2008 for squeeze positions, right? So we can see that the money flow is something's not right, right? So we know we can hold our long. Our risk is minimal. We know that offers could present a problem, but we're looking at the squeeze levels, right? So we're thinking like professionals. Like, you know how many people the MFI tells you, right? If the MFI is going short and the price is going up, it means that people are getting squeezed, right? Because we're moving down too fast. We're chasing. There's a lot of FOMO. You can tell here because we had a big bid stack here. We traded out of it, so lots of bids on offer. There was a disagreement, and you can see the TPO imbalance, right? A TPO above below count. Pull that up on here. TPO above 96. So we know, right? We know there's an imbalance, right? And it's a sell side imbalance, which tells me that if the market ticks and we take the balance, we're gonna get a big move, right? Because then the shorts are already in squeeze territory, so people are late to the game. So it tells me that the chances that these are buyers, the chances these are sellers are going to be successful is actually a little slim. But because we have an inefficiency, we know there's the risk there, so we minimize the risk accordingly. If we're wrong in this trade, we know the bids here will definitely hold, because that will put us further into squeeze territory, and we're going to go down pretty damn sharp if we've already gone down this sharp now, right? So it's being creative, right? We have to think a lot more about how we do things, right? So that's the point. That's what I mean by you need to get the FOMO in order, right? You have to think a little bit more out of the box, because again, if the man in the tower is telling you you need to be short, then you got to be thinking, how many people are short, right? So these are some of the things, I was having a chat with amazing trader Jason Shapiro on podcast, and we have this conversation, and he comes up and he says, look, like, if anyone had told you the S&P was going to be where it is today, when the Fed was tightening rates, everyone would have said you're nuts, right? You should be short the S&P. Today the S&P is up, right? And we can actually see that the S&P is up, right? And that brings you to the look at it, right? So we can see there's some, look, we know that we're tight, right? For us, we're long-term bullish on the S&P, right? It could be at 5K by next year, right? We're long-term bullish, but put this in perspective. There were shorts last week, right? We can tell, right? It's the offer stacking shorts, and we're driving into bids. We can see where these are all late bids. We've got a lot of inefficiency, So no doubt we're going to start to see fills. But look, we got bids sitting at 4295. If those guys hold, we're going to get a big bounce. So if I'm long-term bullish, I'm looking to buy the dip. I'm not looking to chase now. The market can do what it's. If I don't have a position on the S&P, now I'm long some great stocks, right? You see that? I was talking about that on my Discord channel. I've got Coinbase. Got it at $50. It's now at 82. Right? What, you know? And that's because I'm attentive to what's going on, right? I'm not chasing. Everyone is following the narratives. Oh, Coinbase is going to court. Nah, it doesn't matter. It doesn't matter. If people, people want it, you'll see right there. The market will tell you that people want it, right? And that's what you have to go with. So again, for me, looking at what I'm looking at, hey, we're bouncing off bids this week. I'm not chasing. I want to see that drop, right? It's going to happen. It might not happen now, but I mean, if we go all the way up here, 4557, and we start to drop back into bids, then this support moves up a little bit more, right? But we know there's an inefficiency, so who knows? We might drop to 4235. Media might come and say, well, this is the big drop, and then market gets brought back up again. Doesn't matter, right? So again, it's just keeping people awake. Gold, we're just having a chat, trading into bids. We saw the responsive buyer B period settling into bids, testing levels. Looks like we're going to go long on gold. What did I say? Well, you're probably going to retest offers. 954, right? Breakthrough, 2000 again. The thing is, we're structurally long-term bullish on gold. We have seen a bit of a change, but we're expecting this, and now we're building bids. Well, let's see how the offers fare on. We know where the offers are, so we will look at what they're doing. We know that the market had gone incredibly short. It's not really in squeeze territory, because with gold, the commodities, squeeze territory looks a little bit different. We can go a bit deeper, but we're close enough, right? We're historical squeeze territory. If we look at other squeeze territories, we can see that we're in squeeze levels. So the market is being pressed. We're going up. There's still money flowing to the downside. It's a bit of a divergence here near a squeeze point. So again, it's not a clear overbought, oversold situation. We're analyzing how money flow is behaving, because volume is part of the game. So we're analyzing how money flow is behaving relative to price, right? So this is just an additional layer. You use the commitment of traders report, for example. That will also give you an additional layer. You go to my Discord server. I have this massive post on what I thought was going to happen, and we're exactly there with the pound, right? And I said, look, we're in the biggest squeeze the pound has seen in a while, and we're going to get some up moves, possibly to 130, right? So it's just having that awareness. And now look at this one, Bitcoin. That's a great one, right? Look, Bitcoin, generally we know that we need to be at extremes to get those squeezes that send the market lower. Look where we are with Bitcoin, right? Look what the price is doing. So I think the shorts are going to get squeezed. We can see them here. They haven't made much progress, right? And now we're ticking back up again. If we can take these highs, we're going to get a big squeeze in Bitcoin, maybe 50K. And we know the miners are looking for 50K, because that's where they're going to break even on their miners. Otherwise, it's going to cause a problem, right? So we know bids at 26K. And, if you go back to my previous videos when we covered Bitcoin, I was saying, look, I want to be long Bitcoin at 25K, right? Into bids, right? Once we got that reaction and we built up, I kept saying, everybody, get long Bitcoin. But anyway, guys, the point is that you need to do your own mental thinking. So this is how professionals look at the game. We don't really look at it from what other people are saying. There are no narratives. They don't matter. It's who's messed up, who's too long, who's too short. That's the only question we're interested in. Guys, I hope you enjoyed this video. I didn't intend for it to be a bit of a lecture, but I felt that from time to time we need to wind down, get our eyes away from the charts, and just think about what we're doing. Again, I run a free Discord server, so you guys check it out. I can help you guys if anyone's looking to get their head around this stuff. Then contact me, talk to me directly. I'm human, right? I don't bite. But anyway, guys, awesome stuff. Thank you for watching, supporting the channel. I couldn't do what I do if you guys didn't support the channel. It doesn't make me any money. I do this because primarily I enjoy this. It gives me an opportunity to share with you some of the stuff that people otherwise wouldn't tell you. No thanks to YouTube. But to my next video, guys, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?